I had three golden rules which stayed with me till now. Number
Hmm.
one is don't predict, prepare. I
Hmm.
don't predict what is market going to do in the next 1 month, 2 months, 6 months, 1 year, 2 years. That is not my job. First of all, investors should understand that promoters are far, far, far more uh, intelligent and
Hmm.
knowledgeable than investors. And they know what kind of work investors do, what kind of things we look at, what metrics we are tracking, and what kind of version we want to listen from promoters. So they are very, very, very sharp people who are always ready to sell themselves. We'll focus only on one kind of asset first, become a master in that,
Hmm.
and then go for different kind of asset. SEBI is doing a fantastic job of coming up with their yearly report of trading. How many people are losing
Hmm.
so much amount of money in trading? But I, again, being very cold over here by saying that even this is not going to help.
Hi Ankit, how are you?
Hi Kaustav, I'm doing well. How about you?
Great, great. And nice to see you again. So, Ankit, this is the podcast where we are going to discuss a lot of things about Ankit Kanodia first, then about your professional journey into research and investing, and of course, everybody likes a recency bias. तो आजकल आप क्या कर रहे हो, क्या रिसर्च कर रहे हो, कैसे कर रहे हो? So let's begin with understanding कि आपको रिसर्च और इन्वेस्टिंग में दिलचस्पी कहाँ और कैसे आई and what were your initial beginnings and learnings? So over to you, Ankit.
Sure. First of all, thank you so much, Kaustav, for inviting me on this platform. And in fact, I happened to watch one of the podcast of yours of Mr. Jiten Parmar. I am a big fan of him. So I really like that podcast as well. So thank you so much for considering me for this podcast. So coming to your question now, so I have always been a person who is not sure what to do, but always sure what not to do. Okay, so like I read this line by Charlie Munger much later in my life in 2013 maybe, but somehow I was already following that message, which is all I want to know is where I'm going to die so that I don't want to go there. So even without knowing Charlie Munger, I never traded in futures and option. I even before coming to stock market, I was very, very, very jittery. I thought that maybe I should spend more time understanding it before putting even small sums of money. So that is how it was. But coming further back as to how I came into stock market, so I'm from a Marwadi family. I've always seen people discussing about businesses, but none of my family members was in stock market. Uh, because of the bent towards business and commerce, I took commerce and I did BCom from St. Xavier's, Kolkata. I was from a small town, so I didn't have any idea as to what to do. Everybody was filling CA form. I also filled my CA form. Everybody was doing internship while doing their BCom at St. Xavier's. I was also doing the same thing. So from 2002 to 2005, I did everything what all my batchmates were doing. Going to college, attending the CA classes, doing articleship for 3 years, and clearing the two levels of exams. But however, uh, after 2005, when I completed my BCom, I could sense that I'm not enjoying, I couldn't see myself as a career, uh, in a career of accountant or taxation. With all due respect to chartered accountants, in fact, my wife itself is a chartered accountant, but I was not too much interested into auditing or taxation.
Hmm.
So that's why I thought that if I'm sure that I don't want to be in this, what else? So then some of my friends were going for MBA, so I filled up my form for MBA, and
अच्छा.
I landed up in Xavier Institute of Management, Bhubaneswar, XIMB. Uh, I remember back in those days, I don't know how is the how they select today, but back in those days there was ZAT. which was XLRI and for XIMB only. So
Okay.
students who didn't get in XLRI would get in XIMB was generally the case. But even for XIMB, you needed a very high cutoff. It was somewhere
Oh,
around 88% or something like that.
oh,
So so that was it. But in MB, during my MBA classes, I could sense that uh, research is something which I enjoyed. So those two
oh,
years, I realized that going deep into something is something I really enjoy. So that is where equity research attracted me at that point of time. And I'm talking about around 2007-8. And
okay.
I didn't have any investment in the market at that time. I was doing my MBA and I was enjoying it. So 2009, when I graduated, I immediately took a job in a stockbroking firm in Kolkata as a
Oh,
equity research analyst. So I'm talking
okay.
about
Nice.
2009.
Okay.
Even during that 1 year, I didn't invest any money in the market. I was learning because I was afraid that if I put some money and if it goes down the drain, I will never have the courage to come back into the market.
Acha.
So that's my long story.
Great, great. So, a couple of observations. I think at that point, those years, like I'm also a chartered accountant. तो तभी क्या था ना कि इंडिया में एक ही मेन फाइनेंस का डिग्री था which was chartered accountancy. You know, CFA, CMA, and a lot of things have come after 2003, 4, 5. Like I'm a chartered accountant of 2002 batch. So, you know, there was, of course, I enrolled somewhere in 97, 98.
Mhm.
So वो एक था कि इट वाज वेरी नॉर्मल एज अ हर्ड मेंटालिटी टू गो फॉर चार्टर्ड अकाउंटेंसी.
Yeah,
जैसे मुझे भी कभी टैक्सेशन या अकाउंट्स में खास दिलचस्पी नहीं थी, बट अगर फाइनेंस में एक प्रीमियर डिग्री चाहिए तो सीए था.
right.
एंड ऑफ कोर्स मुझे भी एमबीए करना था, जो मेरा रह गया बाय द वे. तो दैट्स फाइन, नॉट मिक्स्ड मच. अभी दूसरे मैं ये देख रहा हूँ कि आपने एक दो बार बोला कि यू हैव दिस थॉट प्रोसेस की इनिशियली कि आपने पैसा डाला तो नीचे जा सकता है या इट कैन गो. So has that kind of a risk management or risk aversion, just as a small point, continued through this journey? How has been, just as a fast forward on the risk management part?
Hmm. So, apart from risk management, I would also say how it came into my psyche or my behavior. Prior
Hmm.
to coming into the market, I was a very impatient person. So, I used to
Sure.
take decisions impulsively, and I ended up paying a heavy price for that. So, that is why when I came to market, so I didn't want to repeat the same thing because two, three times it has happened in my life in other field that because of my impatience, I ended up losing a lot. Okay, it was not in monetary terms, but in some other terms. So that is what I didn't want to repeat. So when I started, I wanted to be very sure that I stay here for the long term. I don't do
Hmm.
a big mistake and get out of the game. That was the
Right.
first thing. And that is where survival is something which I always face or I used to put a lot of importance on survival rather than
Hmm.
trying to grow fast. That was
Hmm. Hmm.
always my thought process. That is how things slowly turned out. And here we are.
True, true. I think most of the guys who go out of the market in the initial years is because not trying to understand things well, but just trying to chase prices or people, either or. These are generally the brain. So great. Now let's come to your start actually formally. So you shared that you were a research analyst in a broking firm. Then how did the career progress since you started
Sure.
a job, and then when did the entrepreneurial bug bite you and you took this up full time?
So 2009-10, as I told you, I did my job for a year. And
Acha.
after that, I quit the job. I thought that I'll learn investing on my own. Uh, I thought that I will read books, I'll reach out to good investors and learn
Hmm.
from their journey and be a full-time investor rather than working as a research analyst in a company. So I
Hmm.
quit my job. I went to my dad and I shared this idea with him. My dad, being a traditional Marwadi businessman who has never seen investments in stock market, for him, this idea turned out to be very, very risky. So
Hmm.
for him, stock market at that time was just a jua, right? A
Hmm.
gamble. So he said that, so I can't allow you to do this. He said
Hmm.
that I'm giving you some money. You go and start a business.
Hmm.
I have an uncle for you who can guide you in that business. And side by side, you do whatever you want to do in the market. I don't have any problem. But first,
अच्छा.
set up a business, learn something.
Hmm.
To be honest with you, at that point of time, I didn't like the idea. Uh, I wanted to be full time into investing. I didn't want to start a business. But
अच्छा.
today, so like as they say, I think there is a very famous quote of Steve Jobs where he says that you can't connect the dots looking forward, you can only connect the dots looking backwards. So today, when I
Hmm.
look back, I think that was one of the best things to happen in my life, that I waited for some years before coming full time into the market. So I made
अच्छा.
a lot of mistakes during those years, and those didn't uh, turned out to be too risky for me because
Hmm.
full time I was into something else. I was setting up a business. Another important thing which happened is while setting up the business, I could understand the long term nature of businesses, the kind of struggle a business has to go through, the
Hmm.
kinds of ups and downs. So whenever I
Hmm.
look at a business now, or even since then, 2012, 13, when I was putting in some decent money in the market, I could I could empathize. I would not say sympathize. I could empathize with the entrepreneur because I would have gone through the same toil myself. Even though my business would be a smaller business, a small scale business compared to the listed business I would be investing in, but I could empathize with the promoter, and I would not take a short term call when I'm investing in a business. So that
Hmm.
helped me a lot. I didn't realize at that time, but today when I look back, I think my understanding of my business, my struggles of my business, that helped me become probably a better investor. So that's what I would say. And 2017 is when I became a registered SEBI registered investment advisor. So from then I'm
Okay.
doing it professionally as well. Prior to that, uh, I was not doing it professionally, and my business
Yeah.
is completely taken care of by my dad. So from 2017 onwards, my dad is taking care of the business. I am completely into markets from then. So
Great. So then, obviously, when you decided to go for an important license like a RIA, okay, uh, you would have, did you fix up your research methodology much before that? Because, see, Ankit, being from the similar, field like you, I have always found every year kind of, because I'm still new compared to you in terms of full time. Okay. हर साल में या हर एक पूरे समय के बाद research takes on a different meaning also, because you had a certain thought आप कैसे करोगे, then as you meet promoters, as you meet other ace investors, and as you experience things while investing also, it gives certain different dimensions to the research. But आपका जो पहला business model कैसा था, मतलब in terms of research, how was the exact research going to be done?
yeah, I think there was a
Yeah, so my question was, uh, आपने आपकी रिसर्च मेथोडोलॉजी कैसे फिक्सअप की कि जिससे आपको कन्विक्शन आए और फिर आप एक अच्छा पैसा किसी कंपनी में या किसी सेक्टर बेस्ड कंपनी में लगा सके. सो रियल गुड आइडिया अबाउट दैट वुड हेल्प ऑल ऑफ अस.
sure. So I'll be honest here, Kaustav. So I would not say when I started up, I had it figured out very clearly as to what I have to do. Okay, and I think there is a very good saying in the market that you at least need three cycles in the market, and only in the third cycle you start making real good wealth, because you make two mistakes. You make a lot of mistakes in the first two cycles. So I would still say that my third cycle is probably now starting. So the best time I would assume should be now ahead, because I made a lot of mistakes between 2010 to 2017. Then from 2017 to 2025 also I have made my fair of share of mistakes. I'm not saying that I will not make any more mistakes in the future, but I think having learned from these mistakes and gone through these two cycles, I think probably the nature of mistakes will come down. The amount of mistakes will come down.
Yeah.
So that's my main learning. And plus, right when I started as a professional investor in 2017, I had three golden rules which stayed with me till now. Number
Hmm.
one is don't predict, prepare. I
Hmm.
don't predict what is market going to do in the next 1 month, 2 months, 6 months, 1 year, 2 years. That is not my job. There are some people who can do it. Uh, More power to them. I have no problem with them. But my understanding is that there is a very, very, very tiny percentage of people who can actually do it on a consistent basis over the long
Hmm.
term.
Hmm.
So I
Hmm.
don't want to do that. So I was very
Hmm.
clear. I will look at ideas. I will look at businesses which I want to buy in my portfolio from a fairly longer term perspective. I will not look at the market level. I will not try to judge what the market will do in the next 6 months or 1 year. Number one.
Hmm.
Number two is consistency is more important than intensity.
Hmm.
So even for my best idea, so generally the saying in the market is uh, back up the truck when you get an idea which you are having a high conviction with. So I'm not trying to say that that is a wrong idea, but for me, I don't think it works. I
Hmm.
am a far more diversified 20 stock portfolio kind of a person, and I will spread out my bets and I will take a very, very passive way of investing. That is how I do it. So for me, consistently investing in the market, putting that money in the market which I don't need for the next 10, 15 years, that is
Hmm.
these things allow me to be a consistent investor who will never take money out of the market. Okay, I may
Hmm.
sell a stock, redeploy it in some other stock, but I have a rule, this rule which I've been following since 2011 or 10 when I started investing in the market. Whatever money I have put in the market till now, I have not taken out. It is there.
Okay.
So market में कम पैसा भले डाल दो, but एक बार डाल दिया तो वो निकालना नहीं है is my tendency.
Good. So, quick, question that comes to the mind. Let us
Hmm,
take the 1819 scenario where, due to
hmm,
the SEBI circular, this definition of small caps, mid caps, etc., changed, and suddenly all the institutions kind of started selling small caps, and there was a very big correction in small caps.
hmm,
Again, in 22, there was a big correction in small caps. Okay, I'm referring to that is because that is where I guess we generally play to make an alpha. And then again, what has happened from September, October 24 till say March 25. So in the last 6, 7 years, especially when you have started full time since 17, there have been three strong corrections in small caps. मैं COVID का तो बोल नहीं रहा हूँ because that was just 25 days of correction, and I think by May June we were already up, and it was a very weak kind of thing. Okay,
hmm.
तो ऐसे टाइम पे भी आपका जो कॉर्पस है ग्रॉस वो उतना ही रहता है और आपका सिर्फ थोड़ा चर्न होता है या कैसे रहता है, जस्ट अ बेसिक आइडिया.
सो कॉर्पस में कोई चेंज नहीं करता हूं मैं. देर इज नो चेंज इन द
हम्म.
कॉर्पस. If I
हम्म.
have some extra money, I will definitely put in those during those time. But I will not pull out any money. See, what I said, I want to just make it clear that in some months or some years, I will probably not put uh, large amount of money in the market because of my inability to generate savings. Okay. But
हम्म.
whatever amount of money I have invested in the market, I don't want to take it out. That is a rule I
हम्म.
always follow. Be it COVID crisis, be it taper tantrum, be it any time of the year, any time on the last 12, 13 years, I don't take money out. See, sometime in the future, I may take money out. It's not, I'm saying that I will never take. See, ultimately, why you are investing in the market to generate wealth and after generating that wealth, redeploying that wealth somewhere else, maybe for
Correct.
your family, maybe for your kids' education or anywhere else, right? So that
हम्म.
eventually I will definitely do. But the point is that I should not panic and take money out
हम्म.
thinking that, oh, next 2 years the market, like at COVID time, nobody knew that it will be a V-shaped recovery. In my mind, I was also thinking that probably we will be having a very tough time over the next 2 years. That was my,
बरोबर.
and I was mentally
Yes.
prepared that even if we don't make any money over the next 2 years, how will we survive? We had, by God's grace, we had sufficient thing to cover both for my business and for my family. So I don't need to worry about that. So that is
Hmm.
the second point, which is consistency over intensity. And the
Yeah.
third point
Yeah.
is do few things, do them well. There are many industries I don't understand. I will not look at it. There are investors who are very, very, very smart, and I look up to them to learn from them. Slowly, slowly, I'm trying to increase the circle of competence, increase the size of the circle when we talk about circle
Hmm.
of competence. But I'm happy going slow, and
Hmm.
I will focus on a few things. I rather than spreading myself out in too many sectors. Because
Right.
when you have few things figured out, that gives you the conviction to stay put during the tough times.
Hmm. Hmm. Agree. So thanks for reiterating the three golden rules. I guess that's a good way to reboot actually. हर साल 1 जनवरी को या 1 अप्रैल को मैं भी इनको पढ़ना चालू करूंगा, so that whatever excesses get built in terms of running in various directions, and research takes the shape of an animal which is not known many times. मतलब it's like a amoeba, it can go in any direction. This will certainly help. So, I mean, since you mentioned sectors, okay, over these 7, 8 years, especially when not only consistency, your intensity was high because you're doing it full time. So, which are those, 2 or 3 sectors which you have now built a certain level of competence, which you're happy about? And maybe take one example of a sector where, how it helps to have that competence, how you actually are able to distinguish between chalk and cheese in that particular sector, etc. Some kind of a deep dive.
Hmm. So, this is a very, very important question, and thank you for asking this. So, let me start this with a very famous quote of Mr. Vijay Kedia, where he says that always try to be in a sun rising sector and always try to
Hmm.
avoid sunset sectors.
Hmm.
So, that's always my, I also try to be like that. However, there are few things which I now when I again look back and connect the dots, I see is that I generally like sectors where there is a natural monopoly or oligopoly characteristics, where the top three, four players control the profit pool by maybe 80% or 90%, if not 100%. There
Hmm.
might
Hmm.
be smaller this thing, but that is one. And the other one
Hmm.
is sectors where the under penetration is so low and there are only few listed players in that space and they have recently come. So that is also one area which I like. So now coming to an example, like if we are talking today, I would say if we take NBFC as a sector, in NBFC right now, my favorite sector is any NBFC which is offering secured finance to MSMEs. Because
Hmm.
if you look at all the large banks or even smaller banks and their assets, they have mostly focused on retail loans, as in personal loans and all those kind of,
Hmm.
or they have taken for large corporate loans.
Hmm.
India is a land of MSMEs and SMEs, small
Yeah.
business houses where probably the credit score is not formalized. There are many things, but India runs on these business houses. There are,
Hmm.
when you look around, just step out of your office or home, you will see so many small scale businesses. And traditionally, over the years, over decades, these businesses have been served only by unorganized money lenders who
Hmm.
have a lot of malpractices, who take a lot of, who charge a lot of interest, and
Yeah.
that is where when a company which is doing it in an organized manner and
Hmm.
have gone through these uh, MSMEs systems and processes, and that is how they have done it. These companies or these lenders have an edge. Why they have an edge? Because they have a large untapped area to cater to where banks will not come. Banks will
Hmm.
only come when these uh, these borrowers have 3 5 years of data with these guys.
Formal credit history,
Exactly.
formal
They will
repayments.
wait for formal credit history. So that is where the advantage is. So and
Hmm.
it will always reflect in the numbers also, numbers in terms of growth rate. So you can look at.
Hmm.
So again, I'll just make a disclaimer. I'm not invested in the company, but I wrote a blog on this business last month, I guess. I'm talking about SBFC Finance. Okay, and I am blown away by the founder and chairman and MD of the business and MD and CEO of the
Hmm.
business, Mr. Asim Dhru. There are
Oh,
two very good podcasts of Mr. Asim Dhru which I went through, and then I did a deep dive on the business, and that this particular sector attracted me in that sense. Why I'm talking about secured finance? I again, as we discussed about being a little risk averse, I don't like investing in uh, financial businesses where the loans are unsecured.
oh.
So, like MFAIs, microfinance institutions.
Microfinance.
So, these are completely unsecured loans. Okay, there is
Hmm.
no security against the loan they give to the people in general. Okay, the large
Yeah.
part of the book is unsecured, right? Unsecured loan is something which I don't. So I am not an expert in financials. I try to control my risk or maybe have a risk management strategy of completely avoiding unsecured loans. Okay. That is why my favorite is secured loans, where as
Hmm.
a lender, there is a very less chance. So if you are doing gold finance against, it's a secured lending. If you are doing MSME lending based on house as a collateral, that is
Hmm.
also a secured lending. So these are
Hmm.
the things which I like. SBFC is a large company, I think around 10,000 or I think 12 to 13,000 crore market cap company.
Hmm.
But I think my preference would be much smaller company than this in the sector, and we'll keep on tracking. As of now, again, I'm making a disclaimer. I don't have any positions here, but this is a space today which we are actively tracking, and we think that over the next few years there will be a very good sustained growth in this sector, and market may also give premium valuation to these kind of companies.
Great. So well understood about the risk management when you deal and how that has taken the form of secured loans as a main bet for you. But then just to dive in a bit more, okay, when you were doing research and you have gathered a certain level of competence while analyzing NBFCs, okay, तो वो कौन से तीन चार की पैरामीटर्स है, okay, maybe fundamental, maybe business wise, which helps you to differentiate between various NBFCs doing similar work. So वो एक थोड़ा अंडरस्टैंड करना है इस सेक्टर का.
So this is a very, again, a very important and also a favorite question of mine. So in fact, started answering this question with my blog on SBFC. So if you'll go and
Hmm.
see my blog on SBFC, which is on our Zen Nivesh Substack, I start by saying is that lending is the most difficult business in the world
Hmm.
because in all other business, when you make a sale, money comes into your books. Over
Hmm.
here, when you make a sale, money goes out of your book. So, and sometime in the future, and basically it is a promise when you are making a sale, the borrower is giving you just a promise that I will pay you back in time over the
Hmm.
years, and you
Hmm.
will also end up making some profit out of it. That is a promise. There is no contract in a sense that you can recover all the money. The borrower can anytime become bankrupt and say that I am unable to make the payment. And that is where NPAs come. So that is how
Right.
difficult this business is and peculiar this business is compared to other. So that is where I see that uh, the best lenders, like you can take examples of HDFC Bank, Kotak Bank, then Bajaj Finance. Look at
Hmm.
the Shriram Group of Shriram Finance Group, which was earlier Shriram Transport Finance, and now they have clubbed everything into Shriram Finance, right?
Right.
So
Right.
there are others also, but the point over here is that if you look at them, they focused a lot on what they want to do, which area they want to focus on, and what are the risky areas they will completely avoid.
Hmm.
It was very clearly. And another positive point or another same similarity which I found in all these companies is that they will like again Muthoot Finance is again one among them. Uh, they will focus only on one kind of asset first, become a master in that,
Hmm.
and then go for different kind of asset. Like when HDFC Limited started, it focused only on housing loan. When
Correct.
HDFC Bank started, it focused primarily on consumer, as in the personal loans,
Yeah.
individual loans. They didn't want to go to the companies and take a risk of corporate, which PSBs were already taking. Shriram Transport started as a CV focused company.
Hmm.
Look at SBFC focused only on mortgage of houses against MSME business loan, right? So I like these kind of companies who first understand the whole system of one particular kind of customer. And when they have like Bajaj Finance focused only on consumer durable loans, and then they start moving into other because their deep understanding of one particular asset helps them further expand in adjacent areas as well. So this is one pattern I really like, and that is what I try to focus on.
Hmm. Yeah. So this is more on the business side, where
Hmm.
and how do you operate? So you would prefer somebody who goes deep first in a particular area rather than being a jack of all trades to begin with, right?
Yes,
Then which are those other fundamental parameters in terms
right.
of the trailing performance, and
Got
how
it.
do you look at the future? Because as they say, investing is finally all about the future. You
Yes,
might be a great business in the past, okay, but then
yes.
that many times hardly casts any shadow on the future. So how do you satisfy yourself about that thesis?
Yeah. So for banking and financial, the one thing which you have to do is you have to understand the ROA and ROE tree, return on asset and return on equity. And you should also understand which banks and which financial institution will probably always have a little higher ROE. Some will always
Hmm.
have a little lower ROE. Like I'll give you an example. Mm, a company like Awas Financiers, which is
Hmm.
into affordable housing finance,
Affordable housing, yeah.
they will always have a slightly lower ROE.
Hmm.
The main reason for that is they have a very conservative approach of having higher equity in their books.
Hmm.
Why do they have this? There are multiple reasons for that. Number
Hmm.
one is they don't have uh, a corporate backup like an HDFC has HDFC Group's backup. Piramal Finance has Piramal Finance Group backup, or Shriram has a. So they don't have any. If I have to call a Hindi name, they don't have a MyBap, right?
My
So
bab.
they are on their own. So they will have to be a little more conservative. They also have to think in terms of the credit rating agencies. If you have
Yeah.
too much leverage, the credit rating will go down. So they will also have to focus on what RBI thinks about them. So because of all
Hmm.
these reasons, they will have a higher equity on their books compared to any other company where they are confident that they can raise more equity whenever they want,
Hmm.
right?
Hmm. Hmm.
So that A higher equity will punish your ROE. Okay.
Got it.
And so you have to understand the concept as to why the ROE is low. And you can't expect that ROE to match with some other thing. So that is one. What one is the how the ROE is getting built in, how the ROAs are getting built in. Second is how is the company growing and what are the NPAs. I don't want to look at too much into detail in the sense if NIMs are going up and down from quarter to quarter, that is fine. I will look at NIMs over the years. I
Hmm.
look at the long-term performance as in year-on-year basis. If the NIMs are getting down, then it is a cause of worry. And if NIMs are going down, it will ultimately be captured in the ROE as well, right? So point over here is that first, the threshold benchmark of ROE is something which the company should be able to uh, pass. Then it should be able to grow in a healthy double digit. Because if you're
Hmm.
not, see, all banks and financials are uh, leverage business. If you're not growing, then there is no purpose of investing in this business. So you have to grow.
True.
Now, if you are growing too fast, then also it's a
True.
problem. Because when you are growing too fast, you don't have probably the checks and balances in place in terms of identifying the weak spots, identifying
Yeah.
which borrowers are not good. So these are three, four things which are important for me. I
Yeah.
don't look at quarter on quarter. I would look at businesses from yearly basis, all these financial business, FY24, FY25, FY26. That is how I'll see. Okay. And again, when the last point on how do I see about the future thing is dependent upon two, three things. Number one is the penetration in the industry, the
Hmm.
competitions in the industry. Number two would be how has the company uh, progressed over the last 10 years and how they are positioned today. And the third would be are there other new uh, initiatives which have been taken by the company because for the last 10 years they would have mastered one particular product, but there probably the growth has also matured. So
Correct.
you always need a new area of growth. So are they investing in new initiatives or not? So all these things put together will give me a sense how to look at the future.
Great. So that was a good quick deep dive on NBFCs. And for everybody's understanding, when Ankit referred to NIMS, that is net interest margin. Okay, so that is their main earning, you can say, or the net earning that they have. Now, next thing is, uh, you know, like आपने पूरा research कर लिया, okay, whether it is the business aspects, whether it is the fundamental aspects, etc. उसके बाद generally आपकी return expectation क्या रहती है? When I say return expectation, it is not stock specific, but
Mhm.
obviously you do construct a portfolio with your corpus. Okay. So आपने well researched companies कर लिए. So two questions in this, in fact, come to my mind.
Mhm.
First is from a 6,000 kind of listed space companies. Okay. I have always found it very difficult to construct a 2022 stocks portfolio because there are opportunities above. Okay.
Mhm.
Then some idea about that. And second is then what kind of a return expectation can we have if we are choosing companies which are growing in excess of 20%? Okay.
So, uh, so coming to the second question first, where you are talking about the 6,000 plus companies in the universe and how do I figure out which ones to invest in. See, I told you earlier also that there are many industries which I don't look at, where I don't have
Hmm.
the circle of competence. Then there are
Hmm.
certain quality checks I have to put where if there is a lot of um something related to promoters which doesn't look nice to me. Maybe it is a corporate governance issue or related party transaction or something which has happened recently. I'll probably stay away from those businesses. So when you have these kind of checks, so anyways your universe come down to less than say 200, 300 companies. And from
Hmm.
there, what we do again, I told you a few sectors where I can take a longer term call, 3 to 5 years and beyond. Those are the sectors where, at least in the listed space, there are very few competitors.
Okay.
3 to 4 is maximum competition in the listed space, is what I'm looking at in general.
Okay.
So that helps me narrow down the set. And now coming to return expectation, I don't want to give a number because
Yeah.
anyways, SEBI also doesn't allow us to post any number or any return expectation from that perspective. But I can give you one something which I ask any youngster to do, or something which I always track myself as well as to how my own personal portfolio is doing. So if you are starting as an investor, so I think most of your viewers would be individual investors. So I'm speaking for them. So if you are starting as an investor today, I would say it is a good idea to have two portfolios. One portfolio completely mutual fund, make an index fund of Nifty. Take a Nifty index fund portfolio. I'm not recommending any particular fund house. You go and buy the ones which is offering you the lowest cost, right?
Hmm.
Whereas the expense ratio is the least. Okay, just go and buy
Great.
that. And just keep buying it. If you can do SIP, do SIP. If you have a limited sum of money, just put there today, and whenever new money comes, you can keep on investing there and track both your mutual fund. This is the first portfolio. The second portfolio should be your stock portfolio, where you
Hmm.
do whatever you want to do, and you can take your own call which kind of businesses, which kind of industry you want to refer to. But at the end of the 5 years, please make a very good calculation as to which portfolio has done what. Now let's take for an example that your mutual fund portfolio gave you 15% return.
Hmm.
Okay, this is scenario number one. Gave you 15% return. Your own portfolio gave you say 16% return. I'm talking about CAGR and XIRR. If you
Yeah.
are doing SIP,
Annual.
it is XIRR.
Hmm.
If you are doing lump sum investment, it is CAGR.
Yeah.
So then it makes sense for you if you are excited and if you like investing in the market, doing your own research, then it makes sense for you to continue investing in the stocks. Okay.
Hmm.
Second scenario, even if it is, say, you got 12% return, market Nifty gave you 15% return, but you think that you really enjoyed the process and you have learned
Hmm.
a lot from your mistakes in these five
Hmm.
years, even then it makes sense for you to try for the next 5 years. But if Nifty has given 15% and you have got 5% return or 8% return, then you should really ask yourself, why am I doing this? Should I actually continue like this? It is better I
Hmm.
put my money in the Nifty. Why Nifty? Why mutual fund? Why not PMS? Why not AIF? Very simple. For any layman, for all purposes, investing in mutual fund is far more easier, convenient. Uh, from a taxation point of view, also, it is very good. Even if you say go into invest in a mutual fund which is doing a lot of churning and giving you good returns, whatever churning it does, if you are not churning your mutual fund portfolio, you don't have to pay taxes, right?
Hmm.
So keep it
True.
simple. That is what I would talk about returns.
Yeah. Great. I mean, a good perspective and a great way to tell DIY investors, that is, do it yourself, which is
Hmm.
certainly going up by the day. कि
Yes.
finally objective clear होना चाहिए. Okay. Should not happen that for your hobby, you
Hmm.
put major corpus to test and you are getting so suboptimal returns that the
Yeah.
primary objective of wealth creation is getting somewhere completely compromised. And at
Yeah.
the same time, there are going to be market cycles. तो जैसे भी लोगों को रोज प्राइस देखने की या रोज 10 बार प्राइस देखने की जरूरत पड़ती है, I would
Hmm.
say it's important that in equity there is at least a 5 year cycle which can really be analyzed. Doing it over a quarters or days is certainly not the way to wealth creation. So yeah, good thoughts. Now, a couple of points that you touched upon. One was when you are trying to shortlist companies, which is obviously you need a theory of exclusion rather than inclusion when you are trying to come down from such a high number of listed companies. So one is you spoke about a couple of red flags. So would like to slightly delve deeper on that. What are the various types of red flags and some a minute's logic to each one. Why it happens to be such a big red flag कि उस कंपनी को अपने को बाहर करना है अपने वॉच लिस्ट से. And second would be what are those few chosen green flags, or you can say really what excites you when you read these things about a company, other than obvious things like growth and all. So a bit kind of discussion on that.
So coming to the red flags, I would categorize it into two kinds of red flags. One, red
Hmm.
flags which are obvious to many people and which are much more glaring. And if anybody will come to know about those red flags, chances are high that they will anyways avoid this company. Okay.
Hmm. Hmm.
Many investors stay invested in those kind of companies because they were unaware of those red flags. Okay. If you are
Correct.
unaware, if you will be aware of those red flags, you will definitely not invest. But there is another kind of red flags which are not that glaring, which
Hmm.
are, in my understanding, are more difficult and are more dangerous
Yeah.
because they don't look that glaring. You tend
Hmm.
to not notice them. So I'll start with the obvious ones first. If the company or the promoters have been in a lot of court cases in their life all the time, I personally don't invest in those businesses.
Hmm.
Okay. Court cases, I mean, see, I'm not talking about the cases related to income tax query or GST query or not. Those are normal cases. I'm talking about some criminal cases or some other
Hmm.
cases where it gives you an idea that the company and the promoters have had a fair share of their life dealing with these issues rather than dealing with
Hmm.
the main job of the company. So
Hmm.
stay clear of that.
Hmm. Hmm.
Second, companies which come with uh, keep on diluting their equity by coming up with fresh rounds of funding. That is again a big no-no for me because I am a very simple man. I don't want to do elaborate calculation and try to figure out different scenarios as to how much this company can make if it dilutes this much or if it dilutes that much. I want a simple business. I want a business which where there is no dilution. If a business which has not
Hmm.
done dilution in the last 20 years or 30 years, I'll be more attracted towards looking at them rather than a business
Hmm.
which has recently started and done dilution. Okay. Having said that, it is not a rule which I put it as a casted in stone. See,
Hmm.
I'll give you an example. I recently wrote about a company called Purple Finance, which is a
Hmm.
200 crore market cap company. I don't own the company. I don't own the
Hmm.
company. I just, because I liked SBFC and SBFC's promoter, I am reading a lot of businesses, listed businesses in this space. So Purple
Hmm.
Finance is a company which started 2 years back only in the same industry. So I looked at it. It came into the market through a reverse merger mechanism where you buy a shell. You must be aware, but I'm just explaining it for the benefit of your viewers.
Sure.
In reverse merger, what happens is that you buy a listed shell company,
Hmm.
and then once you are a private limited company, you buy a listed shell company at a very cheap price, and then because you got that listed uh, facility of you become a listed after you buy that company, you can go for further round of fundings. So over
Yeah.
here, they could have either gone for IPO. IPO is a much more time-taking process and need a lot of compliance also. This was
Yeah.
an easy route, and thanks
Understood.
to the intermediaries in the market, now many promoters are now getting aware of these kind of routes which are available in the
Yeah.
market. So if a company is doing like that, probably I know that next in the next 1 year, 2 year, they will come up with new round of funding because they didn't do a big bang IPO at the start, right?
Hmm.
But given a chance, I will still avoid a company like this because there will be further dilution going ahead. Okay. So
Hmm.
dilution is again a big, big no-no. Third, if the company has uh, entered into too many sectors in the past. So
Okay.
whenever there is a hot sector, they will come and enter in that hot sector and then go away from that sector. When the hotness in the sector goes away, they will also leave the sector. So this is also, so these three are the top glaring points which I keep in mind. Now we'll move to the other one, which I think is far more dangerous because these are
Hmm.
not obvious.
हम्म. एकदम अपेरेंट नहीं है, या फिर
Hmm.
जो रेगुलर डॉक्यूमेंट्स है वहां से दे डोंट हिट यू इन द फेस.
So when I talk about this one, number one is say do ratio. If a company keeps on saying something but doesn't do, and there is a very good way of doing finding that out is just go and look at the annual reports of 2019, 2021, 2022 of any business. What they said that
हम्म.
they will do in the next 2 years, 3 years, 4 years. And look
हम्म.
at the actual performance of 2025 in the FY25 annual report.
हम्म.
You will clearly understand. See, I'm not looking for people who have figured it out 100%. As I told you at the start, I have also been through the journey of an entrepreneur, and I understand that many things which you plan doesn't happen. But
करेक्ट.
the change or but your plan and your actual output should not be poles apart, right? There should be some kind of semblance which can give you confidence as an investor that okay, they are whatever they are saying, they are moving in the right direction. So this is one. Because what happens is that many companies, I don't want to take names over here, but many companies, what they do, they, so first of all, investors should understand that promoters are far, far, far more uh, intelligent and
हम्म.
knowledgeable than investors. And they know what kind of work investors do, what kind of things we look at, what metrics we are tracking, and what kind of version we want to listen from promoters. So they are very, very, very sharp people who are always ready to sell themselves and talk
हम्म.
it in a manner where we will not understand. And they will from time to time come up with new stories which will look attractive to us. Okay.
हम्म.
So, but my filter is that if they have done so many things in the past, they said something but they didn't do it, it's a complete no-no for me. Okay. Similarly, when I talk about the other things which I don't like is that when see, there are two types of promoter I don't like. A promoter who is very aggressive and never achieving its target, and then there is a promoter who is completely opposite of that, where he has an ability to do much better, but is
हम्म.
satisfied with low growth, right?
करेक्ट.
So I need both. One is ability, and the second is the uh, one is the ability, and the second is the intention of the promoter to do. Both is
या.
required, right? So if it is not, if it is missing, I will stay away from those companies. So these are the two different kinds of things which are it's very difficult to pinpoint by looking at the annual report and sharing that see this is it, but at a
हम्म.
conceptual level you can make that out and then filter
हम्म.
your companies in which you want to be invested.
या. Yeah, so good understanding of the red flags, because there can be many and they might change from a case to case. Okay, because there are cycles for business also. That's why markets have cycles, and there can be a time when during a certain cycle and a particular business, a promoter might have a lot of credibility in the walk the talk, and but in a certain other business or a cycle he may not have. So
Right.
ये भी तो change होते रहे.
Yeah,
Then what are those typical? Yeah.
but one point I want to mention over here is that you make money by being positive in the market.
हाँ.
If you go too much, get too much attached to the risk and keep becoming, see, this also is something which happens to a lot of investors as they grow and they go deep into the field of investing. They start looking too much into the risk and
Hmm.
become so like I'm
Paranoid.
reminded of that saying which I learned in audit in my CA
Hmm.
days, that as an auditor is a watchdog and not a bloodhound. And even though
Hmm.
I never became a chartered accountant, this statement stayed with me. And I'm talking, I think I heard this statement for the first time 20 years back, but it has stayed with me, that an auditor is a watchdog, not a bloodhound. I would say an investor is also a watchdog and not a bloodhound. If I become a
Hmm.
bloodhound, I will only look at, like what Charlie Munger says, a man with a hammer will find always nails around him, right? So that should not be the case. There are many investors I see that they keep on talking about the negatives, the red flags, the financial jugglery. That is not your business. Your business as an investor is to make money from market, to be
Hmm.
optimistic. If you are not optimistic, you will not. You must have a risk framework. You should not go out of the game, but you should also have a positive outlook towards investing. If you are not having that, it's very difficult for you to make money.
Correct. Correct. Yeah, and again, any kind of research, as you rightly said, even if you meet the promoter directly, still there has to be some level of filtering and understanding. And now there's the information explosion on what is available on the internet. Again, lot will come at you unless you know how to interpret that in the right way. It will always be, you might be either left being too bullish or too bearish, and then again getting confused from time to time. तो इसमें और एक पॉइंट अंकित टच करना था कि frankly so far I have not been able to do away with my habit of quarterly results. In fact, I look forward to quarterly results and trying to gain a lot of understanding information कि क्या चल रहा है कंपनी में. But you just did mention, and I've seen a lot of big guys also refer to the same thing. कि आजकल we typically try to look at annual results rather than quarterly, because a quarter is a very small time for a company to really manage its business well or do everything. I'm also privy to that since I have been in the corporate and giving quarterly, P&L analysis as a CFO. But still, uh, so how would you distinguish? I mean, how is it that you actually don't look at a quarterly analysis? How do you wait to get the main takeaways from a annual report after you have invested in a company when इतना सारा पैसा आपका दाव पे है?
No, no. So, Kaustav, I think I need to rephrase what I said at the start. So I made that comment based on financial businesses that I'll I'll wait for yearly result because 1 or 2 quarters can happen. But I do track, even in case of financial business, I do take the note of quarterly updates as to how they are going and all. It's just that the final number is something which I would always wait for yearly numbers. But for
Hmm.
all other businesses also, I take a very close watch of quarterly updates, how the company, even though probably I will not change my mind immediately just based on 1 quarter's performance,
Hmm.
be
Hmm.
it good or bad. But quarterly result is something which we very, very, very carefully track in our company. And I personally also try to attend as many con calls myself and ask question, because see, today there is AI. You can get uh, transcripts and summaries at a click of a button. But I think there is no problem with that. It saves a lot of time. So I would encourage people to use that. I'm not saying don't use that. But from time to time, also attend a few calls live. Because when you attend the call live, those pauses and the way in which the management is answering, whether they
Hmm.
are fumbling or they are confident, are they down to earth, or are they snobbish, all these little things, when you attend that live, then only you'll get to know. So use AI, use the summaries, use the transcript. It saves time. You can scan many things at one go, but also go deep from time to time. Also
Hmm.
attend the calls live. That can
Yeah.
also help you, because I'm saying this from my own experience. For most of the companies, I try to read the summaries or the transcripts because it saves a lot
Hmm.
of time. But then
Hmm.
few of the companies I want to say, for example, if a company which I've been following for last say 3 years or 5 years, I may miss out on the con call, thinking that
Right.
I know the management, I understand the business,
Hmm.
I will read the transcript. But in case of new
Hmm.
companies, I would be more excited to go to the call live. I may not ask them the question. Asking question is not the only purpose of joining the call, but I will join the call to observe how they are reacting, see who others have joined the call, what kind of questions
Hmm.
they are asking. So everything helps a lot, right? So
Yeah, yeah.
quarterly, from that perspective, quarterly results are very important. We don't get too hypered about it in terms of just based on one quarter result, we will be very optimistic or very negative. Generally, that doesn't happen. Of course, outliers are there, but generally that doesn't happen.
Mhm. Yeah, Ankit, so you have mentioned a couple of times about your blog on Purple Finance and
Mhm.
others. So I've been reading your blogs on Zen Nivesh Substack. Okay. So first of all, let me compliment you कि आपका जो लिखने का स्टाइल है वो थोड़ा सा यूनिक और इंटरेस्टिंग है. ओके. मतलब आफ्टर एवरी फ्यू पॉइंट्स देयर विल बी सम क्वेश्चन एंड यू मेक द पर्सन सिट बैक थिंक. And especially Purple Finance से मुझे ऐसे लगा कि while I understood that kind of a concept, okay, where an unlisted company, you know, picked up a listed company, okay, but फिर भी उसमें ज़्यादा समझ आया. So I just wanted to understand about Zen Nivesh. It seems it has started a few months back, and many blogs are coming. Now I really look forward to the next blog. तो उसके बारे में जरा बताइए.
Yeah. So thank you so much, Kaustav. So Zen Nivesh is a 4 month old baby, you can say. Uh, Shivam, Harshal, and myself, three of us, we co-founded the company, and we recently got the SEBI registration for RIA, Registered Investment Advisors. So we will
Hmm.
probably next month we will launch our advisory services as well. Right now, what we are doing is we are only focusing on educational content and educational community. So we have a community called Zen Investing Club, which is ZNIC, where we do a lot of webinars. But our focus area is microcaps, and there is two reason why this focus for microcap. Number one reason is that when we started the company, we realized one thing that there are so many other people, be it advisors, be it educators, who are doing
Hmm.
fantastic job of either
Hmm.
advising their clients or educating the clients. So
Hmm.
why will people come to Zen Nivesh? What is Zen Nivesh stands for? Okay, Zen Nivesh is founded by three co-founders and they have some experience in the market. But what is new? How can we create a mark in the sense that people can associate Zen Nivesh with this? Associating Zen Nivesh with investing is a very vague term. There are
Hmm.
many companies in associated with investing. So we thought that microcap is a space where we see a lot of polarization. And what do I mean by polarization? At one end, we have people who look at stock tips on social media, WhatsApp, Telegram, and just invest in these microcap stocks based on that. Of
Blindly.
course, majority of them end up losing a lot in this. And then at the other end of the spectrum, we have people who are completely unaware of the potential of this space.
Hmm.
Our job or our goal at Zen Nivesh is to bridge this gap and ask investors to come somewhere in the middle, have that
Hmm.
balance, learn from people who have already invested in this space, see what are the risks, or rather, I would say, see what is the magic and what are the miseries of microcap space. Okay. And then take a call whether it is for you or not. Just completely avoiding it. So, this was the first reason. We wanted
Yeah.
to anchor ourselves with one particular thing which nobody else is doing. As in,
Hmm.
nobody organized or registered advisor was doing in that way. So that was the first reason. Second reason, when I look back at my own personal portfolio,
Hmm.
anyways, 50 to 60% stocks are less than 3,000 crore market cap companies. And one
अच्छा.
of the best stocks in my portfolio, which has given a fantastic return, I don't want to name it or claim anything on that. That started as a microcap company also. That also I invested when it was a microcap company. Today it is probably a mid cap or a large cap company. but it
Wow.
started as a microcap. So when I see all these things, it makes sense for me also as a person, as an individual investor to invest in microcap. As in, I'm already investing in microcaps. It's just that I'm now paying more attention to that fact. So even in our Substack blog, our focus is towards writing more on microcap stocks. Stocks which are not covered by institutions, stocks which are not covered by brokerage reports, so that you can get authentic research from Zen Nivesh. There is nothing
Hmm.
copy paste from any any brokerage report or anything like that. It is completely. It might not be true. It might not be uh, right all the time, but
Hmm.
it is authentic Zen Nivesh research.
Got it. Got it. Yeah, so that's very interesting. So I would like to talk about the first part that you remember. One is the type of people who are looking for tips and some quick information on social media, trying to follow either a handle or a person or then a chart. Okay. And of course, as you rightly said, there's magic as well as misery in this space if you don't know the head and tail of it. Okay. So मैं भी वहीं पे फोकस करना चाहता हूँ कि how to educate these people because they are already interested. It's not like they are completely missing the train. Okay. They get in, but then they get in at the wrong end of the tunnel, you can say. And of course, then sometimes the train hits you in the face. Okay. तो इनके एजुकेशन के लिए आप क्या कर रहे हो और इनके लिए सजेशंस भी क्या है हाउ टू इम्प्रोवाइज ऑन देयर अप्रोच ऑफ जस्ट रनिंग आफ्टर अ फ्यू थिंग्स.
So I'll say something now which probably be unpopular. I don't know how you take it, but I very strongly feel about it. So I don't have any sympathy with people who are investing in based on tips or based on social media. This thing. I used to have sympathy with them in my early years, and then when the more I studied, the more I read other books and observed the human behavior, I saw that I can't do anything about it. You can't do anything about it.
Hmm.
SEBI is doing a fantastic job of coming up with their yearly report of trading. How many people are losing
Hmm.
so much amount of money in trading? But I, again, being very cold over here by saying that even this is not going to help
Hmm.
because humans have these two tendency, which is deep rooted in their behavioral aspect. One is greed and the other is envy. Greed is to get rich fast and envy is that कि मैं अगर करोड़पति भी हूं अगर मेरे पड़ोसी मेरे से ज्यादा पैसा बना रहा है I can't live with that fact,
Hmm.
right? So when you have these two kind of deep rooted behavioral sitting inside you, I can't do anything
Yeah.
about it. And I don't want to be emotional about it because that is not
Hmm.
my focus area. If I keep thinking about that, I'll not be able to focus on my job. What I can do is that if you have not yet started, I
Hmm.
can try and show you the right way. I'm not sure
Hmm.
whether you will still end up understanding what I'm trying to say, but I have a better shot there rather than trying to teach these guys because it's just like telling a smoker to quit cigarette. In the cigarette packet itself, it is written
True.
that cigarette smoking is injurious to health. And even if
Yeah.
after
Yeah.
that he's buying it and smoking, becoming a chain smoker, and you think that, oh, this guy, he needs a lot of sympathy and let me try and change him. No, you're wasting your time. Yeah, you
Hmm.
have much better things to do in life. Focus your energy in positive things. Focus your energy in making sure that you don't get youngsters getting into that habit itself. But those
Hmm.
who have already gone, I will not have any sympathy or any question towards them. That is how I'm thinking now. I don't know, 2, 3 years later, my thinking changes because 3, 4 years back, 5 years back, pre-COVID, I used to feel a lot of sympathetic towards people like them. Now I don't. I think they deserve this. They chose this for themselves. So
Hmm.
let's not think about that.
Sure. नहीं सो पॉइंट ये है कि people who are already participating in the market, people who are putting their money, and एक दूसरा तरीका है देखने का कि they might try to do research but they may not be able to do research. Okay. So in that way, especially in the microcap space, the
Hmm.
that you frame put a framework sub
Hmm.
3000 crore market cap.
Yeah.
तो वहां पे क्या अप्रोच किया जाए, एंड स्पेशली व्हाट अप्रोच डू यू एंड zen निवेश पुट टू रियली गेट टू द बॉटम ऑफ द स्टोरी कि एग्जैक्टली क्या चल रहा है और क्या चलेगा.
Yeah. So now you have asked the right question, which I want to answer, which is that if you are interested and want to
Hmm.
understand what is the microcap space, how to invest in that, first of all, if you have not invested in this space in the past, one thing I would want to make very clear is that it is a very high risk, high reward kind of space. So don't
Hmm.
put all your money in this space immediately. Start slow. Okay.
Hmm.
If you have, say, 100 rupees portfolio of, say, small, mid, and large cap, put 25, 30 rupees in micro cap when you begin. Okay.
Right.
Don't put two also, because if you put only 2 rupees, it is not going to do anything to your portfolio and you will lose interest. So at least put a sizable
Correct.
amount, but don't put all the money.
Yeah.
Okay, that is the first step because it's a high risk, high reward. You take time to understand the sector, and it is completely fine if you don't like the volatility in the space and you decide that, okay, this space is not for me. That is completely fine. I don't believe in heroism that, oh, see, I can make money in the microcap space. No, there are multiple ways to make money. And for most investors or most non-investors, the best way to make money or best way to generate wealth is by doing the boring things.
Hmm.
Focus on what you do best, earn well due to that, save well, and invest regularly in the mutual funds, right? But
Hmm.
coming back to the microcap thing is that is number one, that it is a high risk, high reward space. And second is this is a space with information asymmetry. Like when you come
Hmm.
to mid cap, small cap, and large cap,
Hmm.
all the brokerage houses cover them. These
Hmm.
companies, most of them, they do quarterly con calls. They write elaborate presentations and results, and then annual reports are also very detailed. You would nowadays have podcasts of the MDs and CEOs of those companies. So you have so much detail about that. In
True.
microcap, that is not there. So there are three edges of investing, which is one is informational edge, second is analytical edge, and third is behavioral edge. When you talk about the large companies, be it large cap, mid cap, or to a certain extent small cap, the informational edge is no more there. To a certain extent, even the analytical edge is not there
Hmm.
because even the analysis is available, right? It's not about the information. So many annual reports, so many analyst reports, brokerage reports, so many decent YouTube videos on those businesses are also available,
True.
right?
True.
The only thing which lies is behavioral edge. But
Yeah.
microcap space is filled with such a that this is the space where you have all these three edges. There are
Hmm.
companies where there is informational edge also. Not many people know
Yeah.
about this company, what it does. It doesn't do con calls. It doesn't share
Hmm.
much of the information in the annual report. So if you can talk to the management and understand and or meet like-minded investors who have good experience in the sector and can explain you the business, then you have that informational edge. And apart from that, analytical and behavioral edge is anyways there, right?
Yeah.
So that is the plus point of investing in microcap. You get all the three edges of investing:
Hmm. Hmm. Hmm.
informational edge, analytical edge, and behavioral edge.
Hmm.
But on the flip side, it is also far more risky. Why it is
Yeah.
risky? Because in larger companies, you can bet on the business based on how the business has done over the last 10 years or 15 years. And business is a sizable business, even if it is a, say, 10,000 crore or 15,000 crore company, you can bet on the business. In microcap space, many a times you have to bet on the promoter.
Hmm.
So that is where it becomes more risky because the promoter can do a good business sometime in the future, may have done bad in the past, may completely change. But you can't take a call always on the business because the business is so small. It has such a
Hmm.
small history. Or even if it has a history of, say, if you are looking at a microcap company which has, say, 30 years of history or 40 years of history and still at a 300 crore or 400 crore market cap company. Like we just wrote on a tile manufacturing company yesterday, which is a 400 crore market cap company, but a 42-year history. Now it becomes very difficult for you as an investor to bet on those businesses because
mm,
whether the management has the capability and intention to grow is very difficult to judge. That makes
mm.
investing in microcaps challenging, fun, and interesting also.
Correct, correct, correct. So I think microcaps, to some extent, due to these reasons, remains highly prone to, I think, one is price fluctuations, which can be much higher volatility than mid caps, large caps. Second is also the fact that actually something happening, like what happened in case of Gensol Engineering. So it was not just about, like it may or may not be a sub 3000 now. I don't remember, but then actually something hitting from the back, which was not anticipated even 1 month before. Okay. So I think, especially in the microcap space, we would like to understand more about your deep dive for the red flags. Okay. What can be the method to reach there when information is not highly available at the larger companies?
Yeah, so this is again, Kaustabai, I would like to thank you for asking this question because this is a very relevant question. So, first point I want to say is that, see, risk can come to any company, even large
Hmm.
companies. Forget about Gensol. Gensol, anyways, was not a microcap company, but you look at many companies in the past, there have been larger companies also where there has been a problem. But I take your point wholeheartedly that that risk is higher in the case of smaller companies and in the microcap space. That is why what I said before, that you have to be on the toes. You have to track
Hmm.
quarterly progress. You have to try to be uh, knowing what is happening in the ground, not just what is being floated in social media.
Hmm.
Okay.
Hmm. Hmm.
So you have to do a lot of primary research, meet the management if required, not just meeting the management, maybe meeting the right players in the industry, somebody in the value chain, a distributor or a vendor. Okay, those can sometimes those people can give you far more logical insight about the industry, which you will not get from the management because management's job is always to impress you with what they are doing,
Yeah.
right? So it's not
Talk
easy
good.
thing, and they are smarter than us. Always remember this: they are smarter than us. If we end up meeting a management, the 9 out of 10 times we will come out of the meeting getting impressed,
Yeah.
but
Hmm.
that doesn't mean that you will end up investing in all those nine companies, right?
Hmm.
So
Hmm.
that is where you have to be very thorough. You have to be very, and you can't put all. So there are people who have very concentrated portfolio of say two, three, five stocks only. I would, if you are investing in microcap space, I would strongly say that is a very risky way to do. Okay.
Hmm.
So I would say the one way to control the risk is have a slightly diversified portfolio of 15 to 20 stocks. I am also not a big fan of too much of diversification. There
Hmm.
are investors whom I admire and respect who have very large portfolios of more than 200 stocks, and they are investing only in the microcap space, and they have done phenomenally well in the last say 15, 20, 30 years. And
Hmm.
I learn a lot about the space, but my personal thinking is that I don't have the bandwidth to think about all these different kinds of companies. As I told you earlier, one of my three rules says that do fewer things, do them well. So I stand by that rule. I try to have a focused portfolio, a diversified but a focused portfolio of not more than 15 to 20 stocks.
Understood. So one quick question that comes to the mind is initially you spoke about the fact that there are certain sectors that you would end up understanding well now after so many years of research. Some you feel that they're outside your circle of competence. Just quoting Warren Buffett. Now, when you are into the primarily into the microcap space, okay, does your thought process about how you look at sectors remain the same? How does it operate over here?
No, no. So again, a very good question, Kaustav. I don't think there is anything changes here. Okay.
Okay.
My primary liking for a sector which was there prior to, see, as anyways, there is no change in the sense that I was always investing in the microcap space only most of the time. So my 50-60% of portfolio was always in the microcap space. It's just that I was not aware of that fact. Now I am much more aware of the fact that I have to focus more on the microcap space. So it is not
Oh,
something which has completely changed something in my routine. Okay. So
oh,
it's the same thing. And I would still focus on businesses, industries which I understand. I will try to expand this circle by trying to learn. See, I will write. See, in our Zen Nivesh Substack, we write about a business every week.
yeah,
So there are 52 weeks in a year. So you can expect us to write on 52 business.
yeah.
They can't be on same industry. There will be different industries. We'll try to learn about that. We will cover as many industry as possible in that blog, but
Oh,
need not invest in all of them.
correct, correct. Of
Hmm.
course. I mean, that's the point of research, right?
Yes,
That after the research, it should not be a predetermined research.
exactly.
मुझे
Exactly.
अच्छी लग रही है इसलिए मैंने चालू किया और पूरे
Hmm.
रिसर्च में मैं वैलिडिटी पॉइंट्स ढूंढूं दैट शुड
Exactly.
नॉट बी पॉइंट so can we just discuss about a couple of such businesses that you have written about
Hmm.
and we can understand कि एक रिसर्च के बाद क्या क्या पॉइंट्स निकलते हैं to
Hmm.
to be fairly and it can be from two different sectors.
Hmm. Yeah. So I'll talk about two small companies which I really enjoyed studying and writing about, and I'm not invested in. So it is easier to talk about companies in which I'm not invested in, so that there is no bias. Okay, because if I'm invested in a company, there is a higher chance that I'll probably miss out on some part which is towards risk. So I'll talk about two companies. One company which I really liked is Iris Business Services.
Yeah.
And the second company which I would talk about is Emerald Finance. Okay. So in both the companies, again, as a SEBI registered investment advisor, I want to make a disclosure that I'm not invested in either of them. But I wrote a blog post on both these businesses uh, in my Zen Nivesh Substack. And while writing that, the research process helped me learn so many things about the businesses which I didn't know before starting the blog. Okay, so that is why even if you don't want to do a public blog like what we do at Zen Nivesh, I want to recommend all of you to start keeping a journal. In our case, maybe that journal is public. We are making it
Hmm.
public by writing it on the blog. In your case, you if you want, you can make it public. If you don't want, you can make your own private journal. But start reading the business thinking that you have to write on it. And when I'm talking about write on it, try to write your insights rather than just copy pasting from the annual reports. Okay, that is not the
Hmm.
purpose of research. You should have your own insight. So now coming to these two businesses. Number one, I will talk about Iris Business Services. So this is a very, very, very interesting business. And the stock price came down more than 50% when I was writing the business, or writing about the business. I think from somewhere around 500 levels, it came down to about 250 levels when I was writing about the business. And prior to that, unfortunately, the co-founder of the business, who was also the chief architect and CEO of the business, and I really admired that gentleman whenever I watched any of his video or read any of his transcript. That gentleman, Mr. Swami, he passed away due to a cardiac arrest. So the general consensus in the market was that uh, in a microcap company like this, if the main guy who was managing the business goes
Hmm.
away for any
Yeah.
reason, it becomes very difficult.
Hmm.
So my idea is completely different. I think he was not, even though he was the face of the company and he was very charismatic and not just charismatic, he was a very ethical person as well. The kind of things he
Oh.
did for the company. So for a long time, he didn't take any salary because the company couldn't afford his salary.
mm,
So that is the kind of ethics he was living by. I'm just giving you one example. There were other things also. Okay, but he had co-founders who are also very capable and have been with him since the inception.
mm,
Okay, so the general consensus of the market that the main guy not being there, the company will struggle. That is something which I don't agree with. Okay,
mm.
so that is why I deep dived on the business. I wrote a blog on Iris Business Service, and I found it very attractive. I didn't invest in it. You can, I don't have any particular reason why I didn't invest. Mostly it was, I was thinking that the valuation may further come down and I'll see.
Okay.
But the stock actually started going up after that. So
Mm,
I think today it is close to 400.
okay.
So, so that's pretty much about Iris Business Service. They are into the XBRL technology. So the exchange filing which we do, all the companies do, they follow this technology, and most of their clients are in the Western countries, and
Okay.
the market is very small today. So that is also one of the concern many investors have, that how big the market can be. We don't know. All those things are there. But this is a company which had a very good, strong foundation in terms of culture, in terms of how the promoters think about the business, how they think about their team, and how in an organic manner they have grown the business. And now slowly they have become a little aggressive on expanding the business. So that
Mm,
makes it a very interesting business to watch for. Again, a disclaimer, not my holding company, and not a recommendation to buy or sell. Now coming to
mm.
Emerald Finance. Emerald
Right.
Finance is a very interesting business because they how it came to my radar or how I came to know about it is, I think my co-founder first told me about this business, Harshal. They are into employee wage access loan. So this is a very new concept in India.
Mm,
There are a couple of startups in this space. I'm forgetting the name of those startups, but I've mentioned all about that in my blog. But in general, in India, it is a very new concept. But in Western countries, it is very popular. And what is this concept? That if you are a salaried person, you get your salary at the end of the month. Okay.
mm,
Now,
mm.
what if some emergency comes? Let me give you a very simple example. I am going to an MNC company in Bangalore, or maybe a startup in a Bangalore, in Bangalore. I get say 1 lakh rupees a month as a salary. Okay. And suddenly I require that 1 lakh rupees on the 15th of July. I am going to get my salary at the end of July. Oh,
Mm.
31st July is when I'm supposed to get that 1 lakh rupees deposited in my bank account as salary. But suddenly some personal need came. I need that 1 lakh rupees today. These companies say, whether be it startups or be it companies like Emerald Finance, they say that uh, you can take 1 lakh rupees from us
Okay.
for a very small charge. So I think for 1 lakh rupees, that charge would come somewhere around a 1,000 rupees or 1,500 rupees. But at that time, I will not mind paying that 1,000 rupees, 1,500 rupees. I would need that money. And I know that my employer is going to pay to them that 1 lakh rupees once that once the 31st July comes, right?
Yeah. Yeah.
So this is a very, again, I would not call it as a secured loan, but it's also kind of a secured loan where the guy who is taking the loan from you is already due to get that money at the
Correct.
end of the month, and you are not going to recover it from him directly. You are going to recover from the company. So
Yeah. Yeah.
chances of it going down is not much. So that was the main reason for me to look at the company. However, the company didn't start like this. The company started as a DSA agent many years back.
Acha. Okay.
Okay. And from there, it started becoming selling long term, as in selling bank products, financial products. From there, it started its own NBFC.
Hmm.
And now, in the last 1 year or 2 year, they were positioning themselves for this early wage access plan,
Okay.
where they will add this also as a product. But then an interesting thing happened recently. In the recent con calls, the management said that this EWA, that is the employee wage access, they will only use uh, as a funnel for selling them or cross selling them other products. This is not their focus area. So 6 months
Okay.
back or 1 year back, management was talking about changing the business or increasing the business 10x in this space only.
Okay.
But
Okay.
recently they have changed that narrative. So, of course, that is the beauty of microcap space. So many things change in such a short period of time. So, I would probably keep it in a watch list and see how it goes, how it performs. But it's an interesting business to look at because, again, as I told you, I like sunrise businesses. I like businesses which are new, which don't have any history in the past. So, they can, if they are managed well, they can create very good growth for the next few years. Yeah.
Yeah.
Again,
So
I
actually,
just repeat, not a holding of mine and no, not a recommendation to buy or sell. Yeah.
yeah, and that's the standard disclaimer for any stock specific discussion that happens on our podcast channel,
Mhm.
that everything should be considered as a education, learning. Nothing is a buy sell recommendation. For
Yes.
that, every investor has to do on their own. We are not recommending anything here. So both the businesses actually were very unique, right? I mean, these were concepts, and now we know that there are actually listed companies which are doing this, right? मतलब आपने जो वेज का टर्म यूज किया हम लोग उसको सैलरी एडवांस बोलते थे इन
No, but
सिंपल टर्म्स.
early wage access is the term used in the Western countries, which we have borrowed from them
Okay.
and
Okay.
used by Indian companies also today. And you are bang on there. Uh, I remember that long back, 20, 30 years back also, or even if you go further back, like
Hmm.
for example, farmers, they, how would they work? They will
Hmm.
take loan from the jamindars or the
Correct.
landlords,
Right.
and based on that they will somehow continue their living, and then
Hmm.
they will work in the farms of those
Yeah.
landlords, and then every month whatever they, or every week whatever be the situation, whatever they earn, they will pay a portion of that to the landlord. So
Correct.
it is a EWA only, nothing changes,
Huh.
right?
True. True. True.
Hmm.
Yeah. I mean, it will be there in various formats in every
Exactly.
sector. Mein. Correct. Yeah. I mean, even in a company, manufacturing company. Let's take an example that there is a factory head who is running a factory with 500 labor, whether in-house contract. ऐसा कोई महीना नहीं जाएगा कि उसके पास 10-20 वेज एडवांस के लिए एप्लीकेशन नहीं आएगा.
Exactly.
होता ही है. दैट द मोस्ट नॉर्मल थिंग अक्रॉस. I guess it would be across all countries, not just India or any particular segment or geography. So that should be a very so other than the unique nature of these businesses, did their high growth catch your attention as well? What were the other couple of parameters which got you completely latched on to the idea, and then the whether it is an investable opportunity?
So, as I said, there are multiple things which comes into play. In case of Iris Business Surveys, it was the sharp fall of stock price. That itself was a trigger for me to have a look at the business carefully, in detail. In
Okay.
case of Emerald, one was this new business which they are talking about. The other was the small base of the company. It's a very
Hmm.
tiny microcap company. And then the third was, if they do it right, what kind of multiple they can get, in the sense that The growth could be in multiples, not
Hmm.
10%, 20%, right?
Hmm. Hmm.
But this was my thought before looking at the company. After looking at it, my excitement has tempered down a little when I found out that their narrative has changed. But even after that, there might be a case of this company doing well. So I'll keep it on my radar and see how it goes. The only
Right.
thing
Right.
which I think is a risk in this business, a bigger risk to look for is probably they'll go for again a dilution anytime soon. So I'll be tracking those things very carefully because, as I told you at the start, if a company is going for too many fundraise, I generally have dislike for those businesses.
Hmm. Hmm. Hmm.
That is not the case
Understood.
in case of Iris. They have never done something like that. Recently
Yeah.
only they did some fundraising. That also happened mostly at one time only. So yeah.
Yeah. So next point, Ankit, logical is since we looked at two particular businesses, we also spoken about a sector that interests you, NBFCs with secured loans, as an example. Uh, so after a research is over for a research analyst or a research guy, okay, then obviously valuations matter, and we don't want to go into the depth of that. But then, how does somebody as good at research as you decide what would be an ideal entry point? Because finally, we are here for investing and making money. Okay, so वो कैसे determine होता है in your case?
So, this is again, I think, one of the best questions you have asked today. How you actually talking about a sector, talking about an industry, talking about a business is fine, but ultimately, how do you enter into those businesses as how many those stocks, uh, how those stocks enter into your portfolio? That is also very important,
Hmm.
right?
Hmm.
So, see, I would say very clearly that there is no one way which works for all. I am here to
Correct.
share what I do. You are free to completely disregard my way of doing it. I generally don't have a isolation buy or sell. 95% of times in my portfolio, it is always a switch. I will always have
Okay.
a list of companies in my watch list, and I will always have, say, a 15, 20 stocks portfolio. So
Hmm.
in my portfolio also, there will be a few stocks which are not doing well,
Hmm.
not just in terms of prices, but also in terms of business performance. And in watch list, there will always be a couple of stocks or three stocks which are doing exceedingly well. And it's like two people fighting with each other. So I have to be a neutral observer. I try to be a neutral observer. Obviously, it's easier to say over here and discuss about it. It's not that easy when I do it, and I make
Right.
mistakes also. So these two, like, these are two people fighting with each other. He is saying
Yeah.
that no, no, you have stayed with me for 1 year, 1.5 years. You know me properly. What are my pros and cons? Give me another 1 year, and I'll do well. Don't be in a rush. He will say that look at my prospects.
Hmm.
This guy is not giving you any return. He's not performing at all. Already you are down by 20, 30%. Cut your losses. Give me a chance. I'll help you recoup that loss in the next 1 year. So
Yeah.
actually, this is what is the fight or the dilemma which goes in my mind always when I make my portfolio decision. I make very
Okay.
fewer switches. I am a very passive kind of an investor. I don't trade my portfolio much, but
Hmm.
this fight is always there in my mind between two, three, four stocks in the watch list and two, three, four stocks in my portfolio. So that is something which I keep doing all the time. And I can't tell you the exact process as to when sometimes I will give this person a little longer time. Sometimes I will cut my losses and ask this person to perform and show me how he is doing. So there is no fixed criteria. Is again, if I have to give the analogy of cricket. So in
Hmm.
general, 2, 3 years, if our player is not performing well, you should
Yeah.
you should get out. right? You should drop that player, right? That is the general. But just imagine if Rohit uh, would have been dropped from Indian side between 2010 to 2014 when he was not doing well. In fact, what Dhoni did was during that time is that asked him to, rather than being a middle order batsman, try and see if you can become an opener and see how it goes.
Yeah.
And you can see how he has performed right after
Yeah.
that. So the same thing we can learn from investing also. Yes, you can't be emotional about your stocks. You have to be ruthless. If it is not performing well, you have to change it with a better stock. But if you have from time to time, you also have to bend your rules. You can't keep your
Hmm.
rule locked in a box that, okay, I will not, never break my rule. From time to time, you
Hmm.
have to break your rules also for one or two
Correct.
companies. It may work out in your favor, it may not work out in your favor, but it makes sense to do those things. So that is how I
Hmm.
look
Hmm. Understood. And the best part is that when you have a portfolio of stocks, okay, these new challengers, you can say, take out some of the, you can say, the ownership bias or the anchoring
at it.
bias that
Exactly.
you already have about your own stocks. So that is a wonderful way to, take up the portfolio quality also, because that will determine the return over a period of time.
Right.
Yeah, my another question on this as a, another point is कि जैसे हम लोग PE ratios, now there is a PEG which is there and other things, which again try to give you a certain handle on today versus tomorrow. Okay. And wherever you feel that what is the price and the valuation today is relatively undervalued with respect to the future. Okay. So do you really have a very strong view on particular numbers and try to stick within that? Or have you taken calls where something can be relatively overpriced or not really cheap, but purely based on the future potential, you thought that इसको लेना जरूरी है, it's a compelling buy.
Yeah, again, very good question, Kaustav. So I will be very honest and candid over here. I have done everything. I have bought very cheap stocks. I have bought stocks which are expensive looking. I have bought stocks which are probably priced to perfection, if not expensive. And I have made my share of mistakes as well. So
Hmm.
uh, I personally feel after all my years in investing and making my own share of mistakes, see, valuation is something which we have to pay attention to it. Even
Hmm.
if so, you don't get a Bajaj Finance or an HDFC or a TCS kind of company. As in TCS today might not be that kind of a company, but I'm talking about the 2000s era.
Not
These kind of
details.
companies every day. When you say that if this is the next Bajaj Finance or this is the next HDFC Bank, there is a higher chance that you will end up losing money out of that. So pay a lot of attention to valuation.
Hmm.
Your starting valuation at which you enter a stock has to be much, much, much more measured. When I say measured, it need not always be based on. So I can give you an example here. So this is a company, again, I make a disclosure. This is a company I own, and I have written a blog on it in March 2023. You can just check Car Trade Tech, Fallen Angel, or Value Trap. Okay,
Okay.
that was the topic. That was the headline. So you can just anybody who is watching the video right now can just check. You will get the blog. The point over there was that for me at that point of time, that company's valuation was very cheap. If
Hmm.
you'd have gone by traditional P metrics or price to sales metric or price to book metric, it would look very, very, very expensive. I
Hmm.
don't want to
Hmm.
get into detail into it. That is there in the blog. But I did my own understand from my own understanding, I could see that there is a good margin of safety when I'm buying. And it turned out well. Okay. But there are cases where I thought that over here in Cartrade Tech, I was not very sure about the quality of the business. It was a decent business, according to me. In other cases, I have been very bullish on the quality of business and I've paid up for it. And I ended up not making too much money. So after having done all these things. And in microcap space specifically, you do get the luxury of getting good price because of the
Hmm.
volatility.
Hmm.
So a mid cap or a large cap stock in general will probably not be available at very reasonable valuation. But in
Correct.
micro caps, there is always a chance to get some stocks at a right valuation at all times because particular sector is out of favor or that
Hmm.
particular business not much information is available in the market. So
Correct.
so then why falter on the valuation part? Focus more on the
Hmm.
valuation is the learning which I got through my mistakes. For anybody starting, I would say focus a lot on valuation because that will only control your downside. Upside, we don't have any control, right?
Correct. True. That's absolutely true. But that's the exciting part as well. While we don't have
Exactly.
a control, many times that helps to get something you didn't imagine when you entered.
Exactly. Exactly.
Yeah, so Ankit, I guess it's been a long freewheeling chat, and thanks for your patience as well as very, very detailed answers. And whether it is sectors, whether it is stocks, whether it is golden rules, all make for a good understanding of our approach for long-term investing. So I would also like to tell my audience that it's very easy to pick up a few stocks here and there and make some money or lose some money. बट अगर इक्विटी इन्वेस्टिंग को आपको एक लॉन्ग टर्म इन्वेस्टिंग और एक पावर ऑफ कंपाउंडिंग आपको अगर एक्सपीरियंस करना है तो दिस इज द काइंड ऑफ अप्रोच that will give you some firm fee in a very dynamic changing landscape. And I would ask Ankit to also have some words of conclusion, advice, whatever comes to the mind.
So first of all, thank you so much, Costa, for inviting me here. As I told at the start, I have a very high regard for uh, the guests which you have called in the past, and I consider it as an honor to be coming here as a guest. So, like Mr. Jiten Parmar is someone I hold in a very high regards. But coming to advice, I would say only one advice is that don't take anybody's advice. Even though I've spoken for 1.5 hours, probably, but try to learn from your own. So observe people. You can listen to people, but don't blindly follow anyone. I think that is the biggest mistake we do in investing and in life. That we
Hmm.
blindly follow people. We make heroes too early. Uh, for any sector, for any field you are in, even if you are in a field outside investing, if in investing, all the more so, don't make heroes too soon. It is not the fault of the heroes, it is your own fault because if you make your heroes too soon, you get so attached to them and their style. You make your investing landscape very narrow. You have to liberate yourself and enjoy the journey, evolve as a investor yourself by doing your own share of mistakes, learning from them, and you will not be able to do that if you are living the life of somebody else. Even if that guy
Hmm.
is Warren Buffett, whom I respect very deeply. Today only I wrote a blog on it on depreciation, and I've quoted from my learnings from Warren Buffett. But I would not like to copy Warren Buffett. That would be a mistake, big, big, big mistake if I try to copy how he is investing. So my only advice is don't take anybody's advice at face value and learn from your own mistakes, learn from your own journey. Try to spend as much time trying out different styles of investing or trading. Even though I have been an investor, I don't have any problem with people who want to learn trading, who want to learn about charts. Some people could be naturally good at investing, some people could be naturally good at trading or understanding chart patterns. So try to pick up what works for you and be a learner. Try to improve. Your main competition is nobody else but yourself. Try to be better than what you were 1 year back, 2 years back, 3 years back. That's it.
Great. Thanks, Ankit, and thanks for your time. See you again.
Thank you. Thank you, everyone.